Hi, and welcome to the Stockscores Market Minutes for May 2nd, 2014. This week, the topic, the market leads, news follows. But before I get into that, a reminder that you can subscribe to my free weekly newsletter at stockscores.com/newsletters.asp. The market leads, news follows. If you wait for significant news to drive stock performance, you are likely going to always be late to the trade. That's because the market leads the news. There are always some investors with better information than others. And because you have some investors with better information than others, it is better to listen to the market and try and figure out what those well-informed investors are doing. When a market or a stock is trading abnormally, it's typically because there's something significant coming down that some investors are trading on. I like to say where there is smoke, there is fire, and a few examples really show that. Canaccord Financial, stock listed on the Toronto Stock Exchange about a week and a half ago, made an abnormal break from a predictive chart pattern right where I've got my cursor. Now on that day there was really no news to justify the break, but 2 days later a major bank upped its rating on the stock to a buy rating and with a $12 price target. The result then, of course, was the stock moved up from there, but I would say that the market began to price in that information 2 days prior, and that's what caused the abnormal trading activity that I picked up on. Another example of abnormal trading activity on Canacol Energy right here, when the stock again made an abnormal move from a predictive chart pattern. And on Friday, the stock gapped up on the open because the company announced good news on a drilling result. Well, if you wait for the news, you're buying at the high. And if you buy the abnormal activity, the market's message that something is going on, then you can get those market-beating profits. All right, let's get into this week's analysis. The S&P 500 continues to be in an upward trend. What I've highlighted this week is a number of periods when the market trends sideways under resistance. We can see that in the last year through May and June, and then in the summer, August, September, more recently through December, January, into the start of February, there's this constant stepping up in the trend. Now we've been going sideways for some time in the S&P 500, and if we then can break through the current red line, that implies that we're going to make the next step up. If instead we break the upward trend line, which I've highlighted in green, well then we're setting up for a pullback. Now we haven't had one of those in a long time, but certainly it's something to watch for because we are at that critical juncture where the two lines are converging toward one another. So right now the S&P 500 looks positive, but watch it carefully, either for a break through the red line, which is positive, or a break down through the green line, which is a negative. Toronto Stock Exchange is outperforming the S&P 500 as it moves to new highs, largely on the strength of energy stocks, but in some cases the broader commodity market as well. This market continues to look strong, and I think it is a market where you can get outperformance. The TSX Venture has been relatively quiet the last 4 or 5 weeks, but it's starting to tick higher again as money is filtering down from the larger cap energy stocks into the smaller cap names. I do think that we can see some more strength in the TSX Venture because the larger TSX market is doing pretty well. The Treasury Bond market continues to move up as there is some flight to safety. Many investors worried that we are near the top of the bull market in the US and that we are likely to see a rotation into some of these safe haven investments, which is what we've really been seeing underway for the last 6 or 7 weeks. So treasuries are going up even though the Fed intends to roll back its bond purchases, which you would think would be bearish for bond prices, but in fact bond prices have been going up, which means interest rates are going down. Now, I expect that trend will likely end in the next week or two as this treasury bond market is near the downward trend line. My expectation is that we'll probably see the bond market top out, that flight to safety trade start to lose momentum, and money will come back to the more speculative stocks, allowing the overall market to continue in its upward trend. US dollar continues to show weakness, falling tops, pessimism in general. It hasn't broken support at the green line, and that is I guess a good thing if you want to be bullish on the US dollar, but it is consolidating downward toward that support, and that implies that prices will fall in the US dollar. That's good for commodity prices, or for commodities in general, because it makes them cheaper for the global standard anyway. People can afford to buy gold, copper, that sort of thing, because most of those assets are priced in US dollars. Gold price is at a really critical point. This week I've drawn a monthly chart going back to 2005 because I wanted to demonstrate how this market has pulled back to the long-term upward trend line and is testing the down trend line in the shorter term. So if this market breaks up through the red line, it looks like gold prices will move higher. If it instead breaks down and breaks that long-term upward trend, well, then you have to be pessimistic. My sense is, given what we're seeing in the US dollar, given that we're seeing money coming back to a lot of the mining names slowly anyway, that the market is sort of sensing that we're more likely to see a break upward in gold. But until it happens either way, I wouldn't put on a trade in that area. Oil market, pretty good run over the last 6 or 7 months. Not 6 or 7 months, maybe 3 or 4 months. But it's run into some resistance. And so we're getting some short-term profit taking in oil. Not a big deal, but it may take some of the thunder out of the oil stocks, which have been doing really well over the last little while. The final chart is that of the VXX, the fear index. And really, when you look at this chart, you see that fear is not a factor in the market right now. We are at long-term support. And so I suppose we could see a little bit of an uptick in the fear index, but there's really no indication that investors are overly scared about what's going on in equities and looking for insurance. So my ratings then, bullish on US stocks in the long term, neutral in the short term. Pretty critical point right now where it's either going to break up through resistance or down through support at the trend line. So it's an important market to watch right now. Canadian stocks bullish on both the long and short term. Gold neutral on both time frames, and the same for oil. US stocks continue to struggle at the resistance of all-time highs, but weakness is always met with buyer support. Canadian stocks are outperforming as money rotates into commodity sectors. Gold is nearing a crucial point to watch, and oil likely to continue pulling back, but energy stocks continue to lead. Well, that has been the Stockscores Market Minutes for May 2nd. Have a great week in the market and trade well.